Morning, welcome to End of Week News. With Ainsley, it's Friday, the 27th of November. Crypto crashes to a 10-day low. What next? Bitcoin falls to its lowest price in 10 days. Ethereum lower than last week. Perspective is everything. If you're around our websites today, take advantage of our Black Friday 1% off all crypto sales. It is only available today though, so jump onto ainsleywealth.com.au. After rising 225% since the last correction in March, in AUD, of course, with all numbers following next, yesterday Bitcoin fell as much as 15% before settling this morning at a still healthy correction of 11.7%, down from Wednesday night's high of $26,400. Year to date, you can see in this next shown chart, yesterday's drop exceeds that of the September correction as well. Pretty entertaining stuff there from BTC. For Ethereum, the news was similar. After rising 380%, or nearly quadrupling since the March drop, Ethereum dropped a similar 18% from a high of $820 to $670, and now back up to $700 at the time of writing. Again, this next shown chart, you can see this drop wasn't as large as that of September when the DeFi euphoria got a little ahead of itself before a healthy correction. So of course, now the million-dollar questions are, why did this happen and where to from here? As with any drop of this nature, the catalyst is often different to the accelerant. This from Bloomberg. The rout began just hours after Bitcoin rose to within $7 of its record high of $19,511, a culmination of more than 250% surge in the last 9 months. Fears over tighter crypto regulation and profit-taking after a frenetic rally were among the reasons cited for a sudden drop. The sell-off gathered pace late Wednesday after Coinbase Inc. Chief Executive Officer Brian Armstrong tweeted about speculation the US is considering new rules that would undermine the anonymity of digital transactions. This is from Cointelegraph. Two key trends caused the recent Bitcoin correction. First, big whales, or big holders, began to sell BTC at around $19,000, resulting in a downside volatility spike. Second, this relatively small price drop triggered a cascading wave of liquidations in an over-leveraged futures market. So in other words, we were in an overbought, over-leveraged position, and it is the correction we had to have. Thus is the nature of markets, and certainly nothing new to one of the most organic markets around in its early adoption phase. What is also certain is that this may not be over, and that bottoms are as hard to pick as tops. This too, visual analogy is only monkeys pick the bottoms, and it couldn't be truer. Averaging in and out are smart ways to play any volatile market. The best question you can ask yourself after any shakeout is what has fundamentally changed in terms of why you bought the asset in the first place. If indeed issues of privacy legislation were a catalyst, we can only observe that this seems completely incongruent with the driving forces behind this BTC bull market. This year has dished up a platter of large institutional, corporate and mega payment platform adoption of Bitcoin and Ethereum amid an environment of unprecedented debasement of currencies and economic uncertainty. We'd respectfully suggest that days of privacy being a large driver of BTC price are long gone. 2020 has heralded Bitcoin and Ethereum becoming large, respected, hard financial assets, being adopted more and more by big money, unfazed by such matters. For a market still relatively in the early adoption phase, this take-up is extremely exciting. Nothing can keep going up like crypto has in the last weeks without a healthy flush out and profit-taking. Check your emotions at the door, keep diversified across hard assets, and if lucky enough to buy dips, take those opportunities when you think that they present themselves. This is exactly what we've seen in gold and silver in the last week, with those buying the dip with both hands and often out of crypto profits. As we discussed yesterday, nothing materially changed in terms of the fundamentals. Wow, that's this week in news. Remember, ainsleyBullion.com.au for all things physical, ainsleywealth.com.au for crypto, with our Black Friday sale, 1% off all our crypto. That is excluding AGS and AUS, because it is still physical gold, those two. But all those other crypto large cap currencies, you can jump in and grab 1% off today only. And our gold silver standard, which I just mentioned, over at goldsilverstandard.com if you're interested in a stable coin that's physically backed by real gold and real silver and stored at Reserve Vault. If I don't catch you, enjoy your weekend, and we'll catch you on Monday for more news.